like Anisha was mentioning, a lot of stocks and more green on the day today. But let's bring on what Dharmesh Shah, head at technicals at ICICI Direct, joining in with us. Dharmesh, good afternoon, and thank you so much for joining in with us as always. Exciting day, right? And every day we see new highs. Let's start with the markets, Nifty as well as the Bank Nifty. What is it looking like? What are you watching out for? This run up is something that we'll see continuing for at least the short term.
Hi, good afternoon. Yes, definitely it's been a very good day for the market. Long time. We managed to surpass the resistance of 23,700. Going forward, we believe I think so market should continue this momentum positive and we should be looking for a target of 24,000 for the Nifty in the near term. Maybe I think so we will see some bit of a profit booking near 23,800 and be act as a major resistance for the Nifty. But eventually, to talk for a bigger picture for the market, yes, 24,200 to 300 is likely target for the month of July, keeping a stop loss of 23,300 to 400. So overall, I think so for the market. So we believe the buy the dip should be the strategy going forward. And if you look at the bigger picture for the market, it looks like there is a long way to go. So yes, in the near term, we believe 24,200 is likely target for the Nifty, keeping a stop loss of 23,300.
Right, Dharmesh, also just if you could give us a bit of a word in terms of the cement side, anything that's looking exciting to you on the cement pack, and today they're surely buzzing away in trade, but reports, news flows coming in on that, but on the technicals, anything that you're watching out for there?
Yes, as a sector, again, I would say that the sector, cement as a space looks positive. And if you look at most of these stock for most of these large caps like PCC, Ambuja, or Ultratech, they have been consolidating for a long time and seems to be coming out of this long consolidation breakout. So we believe for two stock specific, the large caps, we do like PCC from the current levels at 2,600. The stock seems to be facing some bit of a resistance near this levels of 2640, 2650. But we believe this resistance should get taken out on the higher side and we should be looking for a target of 2840 to 2850 for PCC. Same is with the Ambuja. We look for a target of around 690 to 700 for Ambuja. In the mid-cap space side, we do like stocks like Sagar Cement. Again, the stock has done nothing for a long time and is still to be coming out of a long hibernation consolidation breakout. Looks for a target of around 275 to 250 for Sagar Cement, or to talk for mid-caps like Ramco Cement or JK Lakshmi Cement. They also looks positive for 10 to 15% upside from the current level. So overall, I also talk for cement space. Yes, cement as well as infra space. Both looks positive from the current level.
So the top bets from the cement pack, but you have a hefty target on the Nifty of almost 25,000 in a matter of few months, less than 6 months to be honest, because you're seeing that in December 2024 itself, and you're expecting Nifty to hit 50,000 mark in calendar year 30. Talk to me about those targets. What's making you that bullish?
Yeah, so if you look at the longer term picture for the Nifty, I think so. By 2030, we expect the Nifty head towards 50,000. Now, there is something a decadal story which we always believe in Indian stock market. Since 1980, if you look at each decade, I think so market has given minimum 2 to 5x returns in every decade. So if one has done nothing and just hold on to the stocks, I think so, he would be more of a wealth creator. So yes, definitely each decade having 4 to 5x returns. We believe for the Nifty, yes, as we are in 2020 losing 2,000 on the Nifty, we believe minimum 3x should be the return for the Nifty, which comes to our target of around 50,000 to 55,000 for the Nifty by 2030. So every decade, minimum 3 to 4x return gives us the confidence that yes, maybe the recovery should not be a V-shaped recovery, it will be a more of a zigzag. But such corrections has always given us a good buying opportunity. So this is a longer term picture. Coming to the near term picture for December 24, we remain to be positive for the Nifty and we had a target of 25,200. So there is some analysis behind this. If you look at the election years, 1999, each election years, post the election outcome low of Nifty, minimum return, medium return, Nifty has given is around 21%. If I take the low of 21,200, which made a low of June, we believe I think so Nifty should be minimum head towards our target of 25,000 to 25,200 basis on the election statistics. This is one way of looking at the Nifty. Second way is again, I would say look at the picture from January 2020. There has been 3 corrections of around 10% in Nifty. And post 10% corrections, all the time, Nifty has given minimum 20% return in next 6 months. We believe in the current context also, if you look, the Nifty has already seen a 10% correction in a single day post-election outcome. Looks for a target of around minimum 20% for a target of around 25,000, 25,200. Third is again, if you look at the market breadth, which has always been a good indicator. If you look at the market breadth as well as the sentiment indicators, it also indicates something bullish stance going forward. And last but not the least is the fund flows. Domestic fund flows has been always been positive for last 2 years. But again, we believe, I think so, FI inflow seems to be picking up in last 2 weeks. And we believe in next second quarter, we should look at much higher inflows from the FI side. So overall, keeping all together the picture, it looks like I think there is a long way to go for the party. Yes, near term, inside this 25,200 journey, there will be the times of corrections around 2 to 5%. But such corrections should be looked as a buying opportunity rather than getting much negativity in the current year.
Sure, point taken. But 25,200 till the time of end of the year. But if I had to ask you, do you expect a rally, a big rally ahead of budget as well? And if yes, what should be the level that we should watch out, let's say in July series? And would the bulk of the rally now come from the banking index? Because that was the big underperformer. What's your view on these points?
Definitely, I think so the pre-budget rally should be there on the cards, and we should be looking for a target of around 24,400 for the Nifty. Post then, maybe we may see some bit of a correction. But as far as Bank Nifty is concerned, yes, if you look at the ratio chart of Bank Nifty versus Nifty, it has seen a good reversal from the bottom of the cycle. And that has always given a double-digit return in the next 6 months. Such instance happened in last 20 years, 3 times. And what we believe, I think so, in the current next 6 months, we should be looking where Bank Nifty should be relatively outperforming the Nifty. So yes, we talk for the medium-term picture for the Bank Nifty. We had a target of 55,000 for the Bank Nifty. But talk for the short-term target till the month of July, we believe, I think so, Bank Nifty should be looking for a target of around 53,500, 54,000. So overall, I think so, yes, in the near term, the run-up has been very sharp, and we look for something in technicals, we always say overbought condition. So market can see some bit of overbought condition in the near term. So some bit of a consolidation cannot be ruled out. But again, I would repeat that consolidation or any dip towards 4 to 5% should not be looked as a negative, but should be looked as a buy opportunity.
Any dip that comes in should be looked at a buy opportunity, and expecting Nifty Bank to be at 53,500 to 54,000 in July is what we're watching out for. Dharmesh, thank you so much for joining in with us, giving us your time as always on ET Now. It's a pleasure having you on the show. But on that note,
if you like this video, then like, share and subscribe to ET Now.